The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to take a look at the German DAX like we always do, and also the FTSE. Both of those, you see, have made some type of a top and are in the midst of a little bit of a sell-off. Even the United States of America sell-off has happened today. Shut the front door and raise a mint. What's happening here? All right, we'll see what happens at the end of the day, but we're looking at markets that have been very, very strong. Now, I want to switch over to the old Bitcoin for just a minute and get it out of the way, because this is something that we've been talking about for quite some time, and it did do what it was supposed to do. We got down, we saw a handle of 28,500. The actual number for that 382 was exactly at 28,000. Whether that's enough, I don't know, but that is an A, B, C, D, folks. Just do the measurements yourself, and you'll see it's El Perfecto. And if this is right, look out. If that thing makes new highs, shut the front door and raise the rent. You're looking at 65 to 70 large on the Bitcoin. Don't know if it's any good or not. Don't know if it's a scam. Don't know if it's a Ponzi. Have no clue. All I'm doing is just looking at the chart. That's all I'm looking at. All right. Now we are going to go to Old McDonald's farm, and David McDonald has asked us a question from his great-grandmother and asked the question, and where is oil going? So, David, I'm going to do my best to answer it. He was concerned because I have been bearish oil for the last 3 days, and he was wondering why. So here's my 2 cents worth. This is the price of crude oil over the last weeks. Well, it goes many weeks, the last 56 weeks. You'll see we made a 78% retracement from the high that we made back at $66 a share. We went down to a minus 27. Believe it or not, that crude oil contract got to $6. It's now a tad bit higher than that, but you'll notice here that we did make a 78% retracement here a couple of days ago. That was part of what I was looking at, and the second part, of course, was to take a look at the longer term here. On the weekly chart, you'll be able to see what we're looking at here with the crude oil is that we're making a 78% retracement from the high that we made in January of 2020. And I think that seems to be an important number. But what I'd like to do now is to go to a monthly chart. The number of times I do a monthly chart each month, folks, you can count on 2 fingers. And this time we're going to take a look at the crude oil on a little bit different way of looking at it, and that's in the eyes of Mr. Jim Twentyman. You've always asked me questions about the Twentyman line, and thank you, Marshall, you came very close because it is a 135. And there you can see here, there's a 135 on the monthly with lower highs ever since 2018. You can see the Twentyman line. I've marked them in red. Jimmy marked them in red so you can see what they look like. What they basically do is they cut through a swing and go to another swing high or another swing low, and that acts as a fulcrum, either pushing the stock or commodity higher or lower. That's what it says. Now, in this case, the fulcrum is coming in at a high, so it should push the price of oil to the downside. Well, it's already got a $2,000 head start, so it's acting pretty good, I would think. Regarding the gold, yes, I know we missed the gold top by $1, but that's the way they play this game when the big casino missed it by $1, and it's dropped another $35. But I'm waiting to be a buyer of the gold, folks. I think we're going to get below 18,000 one more time. We're only $30-some away now. So we can easily do that. So we're going to be watching. Folks, this next couple of weeks, you're going to see volatility that's going to knock your socks off. I really believe that very, very strongly. And one of our friends up in Canada sent me this really great chart here on the VIX. And just to show you how strong the VIX is, folks, just get this up here, because some people are taking protection on volatility. You can see the massive bottom we had in 1995, 06, and again in 2017. But we had been trading under 10 most of that time. And at that time, those of you that have been with me for a long time, I said, always be long volatility here because we're going to see some big stuff. Now, we popped up to 83 a couple of years ago, and now we back down. We've stayed above 20 during this whole big run from March, where the S&P has gone from 21-something to 38-something. I mean, it stayed above that. I mean, that's really a bullish scenario, folks. I mean, somebody is actually, taking protection on this. Now, I don't know who it is, but there's got to be somebody in there doing it. Otherwise, it'd be down around 7 or 8, I would think. So we'll watch that very, very closely. Now, I don't know if I showed this. Yes, I did show. Yeah, I'll show it again because I think it's worth showing. The hedge funds are basically all in. They've got supposedly a very little buying power left from what this is being sent to us by Goldman & Sachs, and we know that they would never give us bad information. Goldman & Sachs is always worried about the public. That's why when they came out with their report of $200 oil, back when oil was 140, they happen to be wrong on that one, but you'll never know. You'll never know until you look at the history books and see who was selling oil up there at 144. Folks, let me just take a couple minutes here before we come to the break and talk to you just a little common sense, okay? What we saw on the 20th, on Wednesday, was to me a absolute perfect example of a huge speculative blow-off. Okay, say Jay Walker in your YouTube chart asks, is there a Gartley pattern in the Euro 4th hour going downward? Yes, it sure was. It was a Gartley. We shorted the Euro last night at that 121.80 level. It's about 30 pips below that. Our stop is above 122.10. And that's what we're looking at in the Euro. So I hope that helps him. Sometime I might as well show you where it was here. We'll just get this up so you boys and girls can take a look at it. Hold on a second here. Holy moly guacamole. I've been up all night, boys and girls, because I've seen some things that have made me very, very interested here for this next month. And I think it's important. Let me get back to this market here. We had what we think, and I'm almost 100% sure, we've had a speculative blow-off here in the Hang Seng Index, no question about it. I mean, this has been as bullish as you can possibly be. Well, the S&P, all those others. We've done the same thing. We've seen Google go absolutely nuts to the upside. We also saw nothing more than our favorite stock of all time here in the United States, reveling the days of 1950 in General Electric, Procter & Gamble. We went up and made a new high in Apple. And as you can see, we quickly gave it all back. And that's not a good sign, folks. We hit a high of 139 and change and was down $4 lower. Now, if we get below 134, that's going to be very, very bearish. That means it'll break that 382 and that trend will stop. So that's what I'm looking at. I'm looking at the volume. Folks, the open interest in the S&P has only increased by I think 200,000 in the past. It usually runs around 2.5 million, and it's running at about 2.6 million now, the S&P. That should be really big. But remember now, because of Robinhood and stuff, all this stuff has changed a bit. 877-927-66.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Albertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to post a chart here of, I believe it is the Goog. Google will get it up here so you folks can take a look at it. This is compliments of our good friend Mo over in the UK, and as you can see, that high that we made was a 1.618 expansion to the tick. If that's not a good trick, I was a poet and don't know it. I make it rhyme every time. Boys and girls, I really am very, very excited about what's going to happen in this next month. Just looking at what's going on here with this volatility of these, all the things that are happening as far as the bad news in the market going straight up, that's not unusual. This is the same type of price action. Let's don't go there. Let's don't go there, because then I'll get too much of a flack, and I don't want any flack today. But anyway, if you'll look at this, I posted the chart of the NASDAQ. You'll see that it made a really nice butterfly pattern at the high. It's all backed off. Now, the whole key to what I'm talking to you about is today, because if we don't get any higher than 3820 today in the S&P, look out Monday. Because when these things go down, remember, markets go down faster than they go up. And the reason for that is, fear is a greater emotion than greed. And, that's why you have to be very, very careful. So you're seeing videos out there now. I saw a YouTube video of two young kids in their early 20s making thousands of dollars a day just by buying stocks and selling them at the end of the day. It was very easy. They're going to travel around the world now doing this from their laptop, which is a good idea. I've scheduled them for one of my trips so I could learn something, and hopefully I'll be able to return to TFNN after the 6-month sabbatical is over. Okay, let's move on here, folks, to take a couple looks at other things that I think are very, and posted the euro. I've posted we have to talk about soybeans. If you remember here, in the soybeans, I was showing you that it was very, very important that let's just get this up here so we can see it here, get it together. We had this big ABCD stop It rallied $1,500 from our buy point at 35.33. 35.53, we rallied up to 38.85. That's a $1,500 move. Stopped right at the 382 retracement. Folks, that has now broken, and we're looking at a price down another 40 cents in beans, down around $13, which is the 61% retracement. Below 618, 1.618 is you're looking at a major top in soybeans. This next bottom at $13, that's down $1.40 from the high. That tells you that this bean party might be over. That's also true for wheat and corn too. Now these are just charts. I'm just looking at charts. That's all I can look at. Okay, go there, Larry. We can't handle it. The reason why this looks, folks, I spent my whole life, I'm talking 60 years, looking at this stuff because I've enjoyed it the whole time. It's been very rewarding to me and some of the people that I've been able to train over the years. It's been a really great career. I would never change anything. I had a couple of bad things along the way, but I learned something from the bad things. But when you see explosion stuff like that, and you see stuff in the news, and everybody starts thinking the same way, be really careful. And everybody is. That is a shooting star pinpoint. You're correct, in Google and also in Apple. Those are usually bearish patterns. But when you start to see it, if you remember, let's go back with me to 2000 when we had the .com. Do you remember how they had the kids would put their one guy had a helicopter, and another one was he was a guy working in a reproduction place, and he was putting his bum on on the face so he could take a picture of his bum and then also his face, and he was day trading also. So those are I can't remember all of them. They were very, very entertaining, but the problem was it was really indication that something is not right here. Hey, I don't know whether it's a top or not. All I know it's tradable. That's all I know. That's all you really got to look at. So I think it's going to be really quite fun. That's my guess. And we had a lot of fun during October and September when we were selling the gold. We had a nice run in that. And I think we're going to be able to get that gold down below the $1,800 per ounce level a little bit down the road here a bit, and we'll see what's going on. Okay, now let's move on here. We have one other question here that someone's asking me about. I want to be able to get this to them, and we will take it. Are you kidding me? We're almost at the other break already. Shut the front door and raise the rent. Oh, the question's about the 20-man line. Folks, Jimmy T sent this to me last night, just to remind me to take a look at it. Okay, but look, I don't look at monthly charts very often, but when you look at one like this, where you're right up against a 78% retracement of the high of 2020, right to the point, you see, and now you're trading $2 below, that tells you that something's right. So you got a $2,000 lead in it. If in fact if you're looking at it, and I'm thinking that this could be a pretty big move. I mean, if we can go from $6, to 54 or 55, you could easily make a 382 retracement, which is down around 35. So those are the things that are looking at. It's basically Jimmy did a lot of Gann lines and stuff, and when he would see these lines cross like this, he said they acted like fulcrums, and they certainly do. But they're also related to the Fibonacci numbers. And when you see those numbers, those are numbers that you pay attention to if you're a pattern recognition swing trader. And then you'll be far better off if you do that, in my opinion, as we go through and look at some of these things. Regarding the grain markets, I talked about this possible top in here, and the reason why I was doing that in the last few days, there was not a big increase. There was decreases in open interest was one of the first things going on, and the second thing is that the volume was increasing a lot at the top too. I mean, everybody had to be in the soybeans. Now it's $1.50 lower, and now they're sitting around looking at themselves with their hat in their hand, and that's a pretty tough thing to do here. Now, I had permission from my good friend over in the UK who's taught me so much about the world and politics and history, Mr. Zaki, and he said I can use this chart. He has taken off the things that he thinks you wouldn't understand. He tried to keep it just as simple as possible as far as harmonics. Folks, pay attention to this. This guy has been right the whole way. And he's looking at what we're looking at now. We're in that green zone right here. We're at the bottom end of that green zone. And so pay close attention to that. This goes starting back to 1987. And we're very, very close to that. And I think we're close enough that we have these types of blow-offs that we've seen in Hong Kong and Google and Apple and, some of the others. Look at Netflix, same thing. But sell the weaker. The weaker of those stocks is Facebook and also the Microsoft. Those are the weaker of those FANG stocks. Even though Microsoft isn't a FANG stock, we still follow it because it's so very, very important. So those are a few of the things that I'm paying attention to here. We're going to have a break here. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I have to post a chart here for Airbnb. This is the, everybody knows what it is. Anyway, this is the chart of it. And we have a listener over in Switzerland, and he was commiserating with me just a few days ago, and when the stock was trading at 187, and he said that this stock was going to go to 250, and I said it probably will. I said, but before it goes to 250, it's going to go to 155. And he said there is absolutely no chance that that stock is going to go to 155. Well, boys and girls, as you can see here, it did go to 155, and it did it in very, very easy fashion. And you'll notice here, you'll see we had nothing more than that ABCD to look at. And all I did on that was to pull it down. And you'll see here that that number, the actual low on the stock, it was 155, 155.26. No, 155.33, 155.33, and he was kind enough to send me an email yesterday to tell me that I had missed the target at 155, and I certainly said, you're absolutely correct. It was due to an error on my calculator. There was some dirt on it, and the integer stuck, and that's why I was off by 0.33. And then you wonder why there's a Santa Claus, folks. Isn't that the truth? Okay, let's move on here. I also showed him why the 3 drive to a top pattern made a high, and he actually had never seen that pattern before, and said, where does it come from? And I sent him to the H.M. Gartley book, page 249, and then he'll be able to see that pattern. But he's very enthused about the Elliott Wave, and these Elliott Wave folks are very smart guys. Mr. Z's and one of the best there is, but I keep it as simple as possible, folks. That's all I can do, and I know one thing, as Curly says in the City Slickers. I know one thing. Let's take, since we have a minute or two here, we don't have any guests today. Let's take a look here at the FANG stocks. Let me get up here, and we will get this FANG stocks out here for just a second, and we'll look at them, because you can see here many of them have characteristics of these big movements. First of all, we'll take a look. One we've already looked at, of course, is Google. You can see here we broke out of that triangle that I had marked off there this week. On Friday, I put that in. I said if we get above that, there it's going to go, and it certainly did. It took off to the upside. Now, the next one we want to take a look at is Facebook. It is the least of the bullish ones that we can tell so far, and you'll be able to see that we've had a run, and that got up to a 78% retracement of the high. You'll notice the ABCDs on this all worked. I mean, you had a beautiful buy down there on January the 15th at 246. It's rallied 10%. I mean, even these kids that are, this buy low, sell high, that's all you have to do. Now, here's one that looks absolutely could go either way, and that is the Netflix, because you had the big gap up. You gapped up from $50 a share. I mean, that's the biggest gap it's ever left, and it always fills the gap. Well, maybe not always, but we've left a $50 gap in Google, so, made a new high. We've been sideways now for a couple of days, so whether that means anything or not, all I know those are big ones. And then here's one that is Amazon. We'll get that up here so you can take a look at it. Amazon didn't even come close to even taking out. It just matched the high of December 28th. That was at 33.50. It didn't make the ABCD to the downside. It missed it by, once we gapped up on the 20th, it was off to the races. So it didn't make that particular pattern, but it didn't make it. This is the weaker. The fact it's the weakest of all of the ones that we've looked at here. Here's what I've been showing about Microsoft. I think this is a daily chart of Microsoft, and I would believe that for day trading purposes, I'd be watching a sale in Microsoft anywhere near that 226 level, and you wouldn't have to risk more than about $3 on that. And then, of course, here again is the Apple. I want to show it to you again in a 4-hour chart, so you'll be able to see the fact that we did explode to the upside. I thought we were going to get down to that 120 level, but we did go up and make new highs, and that is a shooting star pattern, folks. You don't see them very often. This means that there's a whole lot of volume done at those done early in the morning, and then it reverses. So it filled it in. Let's see if we can show it on a 40-minute chart. Yeah. Now let's just go to an hourly. Let's go to a 30-minute chart, and you'll be able to see it. There you go. Well, you can see it here. Well, this is what it's now. This is not good data. This is what I don't like about delayed data, because I don't do enough in stocks to make a point, but I'll show you what it doesn't even make it. Well, I better show it to you because I said something about it. You see what it did here. You see it's not updating the data the way that it should, because we are into the 22nd, and you can see here we're not anywhere near the 22nd. So that's why we can't use that data, and we will not use it. But I just want to show you the reasoning behind it. Folks, the reason why I don't use stocks, they're too slow moving, and you don't get the leverage like you get with the other stuff, with the futures and the options and things like that. And I do virtually no options. And the reason why, in order to do options and to be successful in options, you really have to understand the deltas, and then you also have to understand that option selling is where you make your money. Sell an option, buy a Mercedes. Those were the badges that used to be at the CBOE when Norman was there, and that's the truth. You take in something that is a decaying asset, and they're paying you for it, and 90% of those options you buy, the puts and the calls, they are never exercised. But those 10% that are exercised, holy moly, that's right. PJ Wolf is saying collect the premium, don't pay for it. That's absolutely correct. And the options market is huge, folks. I mean, it's just, it's a huge market. Okay, Russ is saying, will the 30-minute Apple chart update? Yes, it'll update in about after the market opens, it updates every 15 minutes. The reason why I keep the charts, Russ, is because people ask me about charts like Airbnb and some of the others. Otherwise, I wouldn't even look at them at all, because I have no interest in them. I want to see how the market reacts to it, of course, but I have no interest in actually the physical charts themselves. Folks, back in 1982, when I started to go to the Mercantile Exchange, and I started in February of that year after 6 years at Drexel, I went to see John Hill. And John said, we're going to be having these desktop computers coming, and we're going to see all of these charts coming through. We had to use Reuters and other stuff, and ticker tapes and stuff. I mean, it was terrible. But this was coming. In '83 is when it really started coming. And we wanted to know if, when I went to the exchange, that the orders were filled fairly and without people cheating. And I didn't see any cheating in that area down there, but I know some things that happened that probably were not legal, but that's neither here nor there. I'll tell you what one of them was. If a floor broker, a guy that's filling the paper, if he got stuck with a bad order, and one order one day was a young lady that took the order on the phone, and it was for I'll get back to that right back. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or or SPXS, Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, before we get to the gold market, folks, I wanted to chat with you about my experience down at the Merc. When the orders were filled meticulously, you weren't being cheated, but they weren't looking for your stops, anything like that. You might have got a bad fill because there was illiquidity at the time, but it was very, very fair. But things did happen that were probably, on the borderline of illegal. But anyway, on one particular day, Byron came over to the pit. Came up to Lynn Waldock's office, and I was sitting there. And he said, "Come here." He said, "I want to show you something." So we went down into the gallery where the people could come in from the street and look down what was going on. And he pointed out to me what was going on the side over there, on the side of one of the pits. There were two of the very, very large locals, very household names in the commodity business, and they were negotiating with the pit broker that had made a mistake. The girl had written an order to sell 2,000 Ginnie Maes at the market, and it should have been to buy 2,000 Ginnie Maes at the market, and he had to reverse that. That was a $4,000 move, and it was an error of almost $2 million, and he had $1 million deck, so he made $1 million a year. But what these two gentlemen did, they'll give him the $2 million, but they get to stand in the pit next to him, and they get the easy trades that come in. In other words, a tick here, a tick there, a tick here, a tick there, until the $2 million is worked off. And that's how the business was done back in the days before electronics. Electronics can't do that anymore. The boys got the map of what's going on, what the bids and offers are, and it can't be done anymore. But back in the old days, that's how it was done, and it worked. They ran efficiently for many, many years. One of these days, folks, if I can get Byron to come on and just tell some of the stories that he knew over the years. I mean, he worked with Leo Malamed for 7 years. He ran Goldman Sachs' operation for 6 years down at the Merc, and he really knows the stuff. He could have been on the board of directors of the Merc, but he wanted to go out on his own and be a private trader, and that's what he's been doing for the past 30 years and enjoying it very, very much. Okay, now let's move on to a question that someone's asked us about, and that is about one of the futures that we follow quite a bit, and that is the natural gas. Now, you'll notice here on Friday, I want to update this because you want to see what's happening. On Friday, we talked about the fact that it had to hold that 382 retracement there at 260. That was very, very important. Just like we were talking about the soybeans yesterday at 1353. It had to hold that. Well, it doesn't have to, but it should. And that's the main reason why you want to be able to be watching it. So that's the main thing to And I updated this little puppy today. Now that I've got so many charts in here today, the $64 question is, am I going to find it? And it doesn't look like I'm going to. But anyway, what's happened is that natural gas now is down at 240. I think that we're heading to the 175 to 180 level. We're just going through these areas just like, melted butter. It rallies 5 to 7 points and then gives it all back and keeps going lower. And so that's it. I don't know anything else to tell you about that natural gas other than it looks lower to me. I'll cover it in the newsletter this weekend. But let's get to the gold market here. We only got about 5 more minutes before the bulk of this is over. And you'll see here, get this gold chart up. I believe I have it. Yep, my gold chart is up. You'll see we had the 382 retracement. It went a little above the 383 retracement, and now it's heading down. And it looks like we're heading down to this level right here, around just under, right around 1700. 1702 is the 1.618 expansion and the 1.27 expansion. And I believe somewhere between 1702 and 1650 is the long-term 382 retracement going back. I'll do all this work in the newsletter, of course, but it'll be down there at around right around 1650 from the low we made at 1030 back in December 2015, and here we are 6 years later. We've been making the first big monthly ABCD pattern, and that will be the one. There'll be nobody bullish when it's down there, folks. I can promise you that. But that's when you want to pull up the old dump truck and buy a couple of coins and see if it'll go higher, because I think it's going to go a great deal higher on that. One of the questions that someone just asked me is about the Hang Seng market. Do I see anything in the Hang Seng chart that would be a little bit fearful? And that is the fact that, we got to 30,000, a little above 30,000. We closed today at 29. Right on the low at 29,400. That means if we close badly in the S&P today, which badly would be anything under 3805, that would mean that we're probably going to open lower and have a really nasty week next week, is the way it would look to me, just from a technical perspective of that big blow-off high, because there was all the people that bought that stuff now are underwater. And, they remember fear is a greater emotion than greed. So you have to be able to rely on that to tell you that, yes, that could happen. But whether it does or not, I don't know. All I do, folks, is I look at these patterns as far as how much I have to risk when I enter the trade. And that's the whole premise of doing it. You got to try it one after another. So that's the way it looks to me. So who knows? Anyway, those are just a few of the things that we're looking at, and I believe that we're getting ready now. On the platinum, I wanted to bring that up because we have a very dear friend over in Cairo that is heavily involved in the platinum, and we made a 1.618 expansion yesterday at 1156. It backed off quite a bit. And we're still looking at higher prices in the platinum around $1,200, but within $50 of the big pattern. So, that may be enough. I really don't know, because we have to wait and see. As long as we don't get below 1,075, this is going to be still very, very bullish, and the platinum market is near as I can tell. So let's look at that. Oh, by the way, for next week's guest, we will have Stan Harley on towards the end of the week. We will have Norman, who calls it to the minute. Winsky will be on the 26th of January. And I think that'll be an interesting one. He's always has some great stuff. And we'll see what Norman has for us on Tuesday. Those are the main ones. We've got a break coming up here a little bit. If you have any questions, there's one line open, folks. One line only. 877-927-6648. And we'll see what happens. The one thing I really believe with 100% confidence, we are going to see some volatility here. It's going to scare people like me, and I don't get scared very easy, but that does happen. I get scared on days like 9/11 and stuff like that, where you don't have any control over everything. But usually when you see these really wild moving days, I think it's going to be similar to the dot-com bubble. That's just my guess, because there is nothing bullish fundamentally out there in anything. And these guys that look at the fundamentals have been scratching their heads for the past year, saying, how can the market go up with everybody out of work, a lot of people out of work, and nobody's paying their bills, and the government's printing money like crazy? Hey, the government the government's printing the money, buddy. I mean, that's the whole thing, and they're going to keep printing it, I guess. Where it's going to stop, and these stocks could go to 40,000, 50,000 in the Dow if the money keeps printing and they just keep, just diluting the money. But my God, what happens after that? It's going to be pretty much. We'll see. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that will take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the daily chart of natural gas, a really great way to trade. Good volatility. It gives you terrific patterns, and the margin is very small, and it's ideal for trading patterns. Well, anything is. It moves actively like most of these things do. You notice now we're trading at 245. The low we made last night was 241. That was a 78% retracement of that whole move. It stopped. It's only rallied. Here again, I've told you, or I've suggested it only rallies $5, $6, maybe 10, and then goes back down again. So this is still in a very, very strong downtrend. Anything below 241 is going to set up that target that we're looking at is roughly 175, 180. And but that's what it looks like in the natural gas. So even though you might have an opinion on something, you have to be able to change it if the market doesn't react the way that you think it is going to. Just like if I don't see any volatility here and these stocks continue to make new highs early in the week, then I will certainly have to reassess what I'm looking at here and change my position and not be short or not be long, depending upon what I'm looking at with the patterns. But what I look at is how much you have to risk to find out whether you're right or not, boys and girls. That's the whole key, because if you can do that, you're going to be right over a long period of time, because these patterns repeat so much and with such regularity that you'll be able to understand what they're doing and how they're doing it. But it does take time. You don't learn to do this overnight. I've always said it takes 2 hours to become a professional trader, so you got to give it at least 2 hours, and then you should be okay. That's closer to 2 years than 2 hours, boys and girls. So just remember that. Well, try to do something nice for one of your neighbors or someone that you see that is having trouble, because there's a lot of people out there that are having trouble. And I just want you to remember to do that. I think it's very important. Live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side on Monday, God willing. So have a great weekend, folks. We'll talk to you Monday.